Let's get to the trade on Alphabet, which is stock number one in today's earnings exchange. Jeff Kilburg is a CNBC contributor, founder and CEO of KKM Financial. Jeff, kind of quietly at all-time highs here, Google has been. So what do you do with it?
Well, Kelly, I know you guys are talking a lot about Google, Alphabet, and also the competitor DeepSeek, but I'm more focused on Deep Dish as it is lunchtime. But what we're doing here with Google, at an all-time high, to your point, 52-week high, is off about $2. You still have to own it. It's a workhorse. I know it's not the AI darling that we want, and we're going to be looking for more Gemini conversations on it. But look what it's done in cloud. We have expectations for this earnings season to report that they had another 33% increase in revenue just on their cloud. So when you look at 2023, it was up 58%. Last year in 2024, it was up 36%. We do believe it has the ability to move higher, but I think it is susceptible and vulnerable to the global macro vulnerability. So I want to be a buyer here more, and its 50-day moving average down at 189. So we just recently, we own this in the Essential 40 portfolio. We just reweighted it. So we took our profits from 23 and 24, and we reweighted. So we still own it. We're long it. We believe in it, Kelly, but we do think it's susceptible to this MAG 7 revaluation.
Very interesting. Okay, let's move along then to one very different. I mean, it's a healthcare name, which,
yes.
you know, I mean, it's up 11% year to date as healthcare's kind of had this little renaissance. But what are you watching for on the earnings? And do you like the stock?
Well, I do like Amgen, but you're absolutely right. When you talk about an S&P 500 sector, look at XLV, it is the best sector year to date. But on a one-year perspective, healthcare has been just absolutely horrible. It's been a disaster. And that's been a lot of fear and expectations of what RFK Jr. may be doing if he does get confirmed, which I think is coming here shortly. So it's interesting to see Amgen, which is a massive market cap, $155 billion company. It has not been well performed when you compare it to Vertex or Gilead. So I think it has the ability as a laggard to be a buyer here. And actually, if you look at it's 15% off its all-time high, Kelly. And I think if we get any momentum, continued momentum in healthcare, you're going to see the laggards be bought, because if you're owning XLV, it's very hard to see that market move back higher. You have to be a stock picker in healthcare.
Still, it's odd that we're more excited about Amgen than Alphabet today, but I think it's an important sign of the times.
It is. I think it's the rotation trade, right? You have to understand what sectors are in favor, what sectors are not. We all know that Google's been the workhorse, and one of the workhorses in the MAG 7.
Can I ask you a quick side note before we hit the last stock about Palantir, which, you know, people didn't like hearing the criticism from Kim there just a few moments ago. Is that a stock you'd be eager to jump in and follow?
I've been eager and following since its IPO. I've been trading in and out of the stock. Don't own it going into earnings, but it's been a phenomenal move higher. But I think you have to consider what they're doing. And their creativity, I think, is an input in an investment thesis moving forward. So Palantir is reshaping a lot of the way investment themes are coming out, and that's going to be changed from year to year. So Palantir is very important to monitor, and I think you have to own it at some point. But if you missed out on this, I have a hard time buying it above $100, Kelly.
Yeah, all right. Let's go back along to Chipotle then, which is up 5%.
Back to lunch.
Yeah, that's right. Under the new CEO, it's actually up about 5%, although their old one, Brian Niccol, who's over at Starbucks now, those shares are hitting a 52-week high today. When it comes to Chipotle, analysts like the new menu offerings. They say some slowing comps at year-end could be due to holiday and weather shifts, not weakening underlying demand. What do you do with this one?
Well, I think you have to be patient here. I want to be waiting to buy, but I think you buy this. This is a fast food option that's evolved over the last couple of years, and it's just a healthier choice. When you think about Team Kilburg, where are we going to pick up a quick meal? Chipotle is high in that list, Kelly. So I think if you look technically right now, it's $60 and $59 respectively. It's the 50-day and 200-day moving average. So it's been kind of stagnant or coiled, if you will. So there's an opportunity if they reveal consumer strength, if they reveal same store growth that's going to be better than expectations, you'll see a pop-up. But I think you're going to have the opportunity to buy it a little bit lower because it, again, is vulnerable to that global macro consumer strength type of consideration as we move through all of the headlines that continue to come out on tariffs and whatnot.
We are also there all the time, so it's hard for me to get too bearish on it at this point. Jeff, thanks. Appreciate it today.
You bet, Kelly.
Jeff Kilburg, KKM Financial.